Hello and welcome to this week's edition of the weekly market update here with cash flow options. Thank you so much for joining me here on YouTube. Well, exactly what I said last week has actually occurred. Have a look at this. We have seen the markets rally here. We spoke about this level here at 385 on the SPY or 3,850 on the SPX. I said that now that we've had a flush out with this long wick and stopped a lot of people out, both bearishly and bullishly, we're likely now to move higher to this 21 EMA. Not only did we do that, on Friday we closed strongly above it on its high. So this is very strong price action there. And if you narrow down the time frame here, say to a 5-minute chart, you can see that this stock, or this market, should I say, the SPX, the best gauge of the overall stock market, actually finished on a high. Amateurs open the market, professionals close the market. So when a market closes on its high like this, that is very bullish. Now, short term though, right? So for me, there's Fibonacci projections and a whole range of things that you can do here, but to keep it relatively simple, I think that we could see, now that we've seen a strong closing on its high for the day with the SPX, I think this could easily have a move up to the 50-day moving average here. All right, which is around 427 on the SPY, around 4,276 on the SPX. I think we could certainly see a move up to there. Again, this is short-term bullish. Overall, we are certainly still in a downtrend. We didn't enter the bear market because we had that rebound that we've just seen in the last week. But could we roll over at the 50-day moving average and then enter that bear market? Yeah, right, very easily. But short term, I do see us being bullish. Now, obviously, if we closed below the 21 EMA on the daily chart on the SPX, then yes, I would start to change my opinion. But when we look at our opening range here, we're certainly in bullish opening range mode and above the 21. So the 50 is where I would look at the markets again. I would make another decision at that level. So short term, I am bullish, and I do think that the markets will move higher at least over the next couple of days. That's my viewpoint, right? Now, if we look here at the workspace, we can see all the major indexes now on the daily chart: SPX, the NASDAQ, the Russell 2000, the transports, and the industrials. They've all just closed above their 21 EMAs again on the daily chart. You all know now, listening to me for a while, that the 21 EMA is my line in the sand on the daily chart between short-term bullish and bearish. So seeing that now, bullish opening range mode, bouncing off that 38.2% fib level that I mentioned, right up against the 23.6% fib level here as well. So we close above that. The 50-day moving average is where we are headed, in my opinion. We've seen a bit of a pullback here in the US dollar recently, okay? And this is something that we've, definitely the Federal Reserve is interested in keeping the US dollar up, but we have had a bit of a pullback here. We could see some further weakness there in the US dollar going forward, but for me, right now, short term, I am bullish. Now, one of the areas that I'm looking at right now is semiconductors. Now, SMH is a way of looking at that. So they've had a nice move as well, right? They've now finally got above that 21 EMA on 2 days, 2 consecutive days, closed just above the 50 actually. So one of the stocks that I am looking at right now is AMD. We've had some consolidation here. We've had this round number 100 support level here. So we've had, what have we had? 1, 2, 3, 4, 5, about 6 or 7 touches of that 100 resistance level. We've now broken above that. We've broken above the 50-day moving average as well. So all I'm looking for this week is for AMD to get above $105, to get above that price level of $105. Not far from where it is right now. Sean, what sort of a return could you make for it just getting above 105? Quite a substantial return. In fact, let's go and have a look at some of the positions that we've placed, and I've actually called all of these live right here on YouTube, and you guys have actually heard me talk about these. So the first one, now with the SPY, these first two were using the TRIN, the most accurate overbought, oversold reading in the stock market, right? And I called using the trend for the SPY to move higher, even though it was moving down at the time, right? So it was actually moving down here. I called for the SPY to move higher here. That's sorry. Get the SPY up would be helpful. The SPY, as it moved here, I was looking for it to rebound higher, and that's exactly what we saw, right? So using the trend, I looked at this as being extremely overbought, right? Again, it's the most accurate overbought, oversold reading on the planet. Much more accurate than the RSI. Most of the time it's neutral, but in this instance it was flashing oversold. So I was looking for the markets to rebound. We entered a call debit spread on the SPY and made an 88% return in 4 days, right? Taking into account our stop. So our maximum risk here was $270 a contract. Okay, we set our stop at $1.50, so we're only risking 120 to make 230. Now again, make sure you've got asymmetrical risk with every single trade that you do. Asymmetrical risk is simply the potential of making a much higher return than the risk that you're taking to achieve that return. You must be able to structure your trades like that as set and forget trades. Very important. So we made a very nice return there of 88% return in 4 days. Then the trend a few days later was telling me that the market was overbought. It had rallied too quickly, too fast, right? And it was likely to move down. 90% of the time it's likely to move down. So what do? We set up a put debit spread. Again, I called all of these on YouTube for you. Now, we entered this with $79 a contract was the amount of risk we're taking. And we closed this out at $1.10. So we made 39% return in a week. Again, both of those using the trend. And then last week I spoke to you about USO. In fact, that I was bullish on oil. And what did we see with USO? Well, we moved above that $85 price point that I mentioned, right? So this too was another winning trade. So what I want you to do now, we enter this for $121 a contract. You can close it out now for $170 a contract in a week. Taking into account our stop, close the trade out now, because one of the ways you become a consistently profitable trader is take profits when the market makes them available to you, right? It's unacceptable now to turn this back to a break-even trade, or worse yet, a losing trade, right? We've got to get out of it now when the market makes the profit available. And when it makes it available to you very quickly like that in a week, that's a gift. Take the profit, right? So we're closing this trade out now, and we'll make an 80% return in a week. The other trade that I showed you all last week was with Pfizer, and I set up a call debit spread. Now, it didn't quite get to 55. It was 52 at the time when we looked at it. Let's have a look at it now. Right now, it's trading at 53.91. Now, this is a little bit, if we just bring this in a little bit here, we've made a nice return, so that's one reason to get out. But this is a bearish candle here. So we saw that the buyers tried to drive it back up and the sellers drove it all the way down to close back here. So it's a bit of a bearish candle. Then we've got a doji, an indecision candle, where it didn't really move much at all. Normally I'd wait for a close below that doji before I got out, because we could easily have a close above confirming the continued uptrend. But for me, what I'm going to do now is close this out. I've made a 53% return in a week, considering my stop here. It's only cost me $98 a contract. It's now worth $135 a contract. That's a 38% return in a week, or with our stop set at $82, we were only having a very small risk on this trade, right? So I'm closing that out now. That will be another winning trade. Now, the new trade that I do like is with AMD. Like I mentioned, it's broken above that 100 level. I'm looking for this to get above 105, not too far from where we are right now. So the goal is to expire above 105 at expiry, or move higher for early profit, just like the SPY did, both the trades, just like USO did, just like Pfizer did, right? So we're closing, we're going to enter this trade now, and if it does close above 105 at expiry, we'll have our maximum profit. But our goal is to see a short-term move in the next 2 or 3 days or a week, right, before I speak to you again. So we can set this trade up by selling the 105 call, buying the 100 call. So the The one we're buying is in the money, and the one we're selling is slightly out of the money, with the price being around $102. So it's going to cost us $255 a contract to set up this spread. The potential profit is $245 a contract, 96% return on risk. Our break even is the buy strike 100 plus the cost 255 is $102.55, which is not too far from where it is right now. So it's a fairly conservative trade, really. So we set our stop at $1.55 and our risk is 100 to potentially make 245. So that's certainly asymmetrical risk skewed in our favor. $245 potential profit with a potential risk of $100. So that's another trade that we're setting up. We have been on an absolute run of winning trades, doing very, very well. Over the last several months, we have had about the last almost 5 months now, we've had 29 winners, 4 losers, and a break even. Not bad, right? So that's where we're situated right now. Short-term move to the upside in the markets. Let's watch the 50-day moving average. Let the market tell us. We're not in control. The market tells us. We follow what we see, trade what we see and not what we want it to be, and we will wait and see how that goes. So that's the view right now. We saw that the FOMC meeting minutes came out this week, and we can see that according to those minutes, there is an absolute urgency by everyone to fight inflation. They spoke about core inflation, the fact that that's come down more than expected. So that was part of the reasons why we rallied as well. But the core inflation always makes me laugh because core inflation excludes food and energy. Now, I don't know too many people that can exist or eliminate those two things out of their cost of living, food and energy. Anyway, that was down less than expected, and the US dollar's falling. We spoke about that. This week, consumer sentiment, industrial production, and several unemployment numbers coming out as well. And certainly the employment rate is due this week. So keep an eye on that, and the 50-day moving average on the SPX. All right, my friends, with that short summary, that's all I've got for you now. As far as Bitcoin goes, we are still in that bear flag formation. We're just below 29,000 right now, US a coin. We are still in certainly not bullish, right? We'd have to get above 30,000 and start moving above the 21 and 50-day moving average for me to get bullish. But right now, that is forming a bear flag, like we saw back here as well. So another bear flag here. If it does break that sort of 28,500 level, we could be moving down further again. Where could we go? Probably to 20,000 if that does happen. So we'll wait and see, right? Long-term view on Bitcoin, yes, still very bullish. We're just in a shakeout phase. This is a shakeout phase with the S-curve, and that leads to mass adoption, just like with any other new technology, relatively new technology. There's always the shakeout phase, where a lot of these cryptocurrencies that exist right now will be non-existent going forward once regulation comes in and a whole range of other things occur. And you need institutional money to come in. That's not going to come in until we get clean, renewable energy that's mining Bitcoin, and we also, which is starting to happen, and we get some regulation, right? That's the only way that the large institutional money will come in. Once that happens, things move up dramatically, and that's what we're looking at. But for now, short term, it does look bearish, but we haven't broken out of the bear flag yet to the downside. So anyway, that's my view there on Bitcoin. I'll talk to you guys all again next week. If you've got any comments or you like what I'm doing here, I'm not sure if I'm going to continue to do this on YouTube. Just a bit of an experiment, just some weekly videos to help people out. If you do like what I'm doing here, send me an email to support@cashflowoptions.com.au, and I will continue to do it. If we don't get a huge response, then maybe we won't. So let me know what you think. It's been a pleasure to present to you. Talk to you again next week. All the best, and bye for now.